Pullbacks can mess with your head. You see a strong trend, you enter with confidence, and then price suddenly moves against you. Panic hits. Is the trend over? Many traders mistake it for a reversal and exit too early, or try to trade against it and get steamrolled. In this video, you'll learn what pullbacks are, why they happen, how to spot them in real time, and how to use them as powerful entry points to ride trends with precision. So let's get started. When you're trading, one of the most common patterns you'll see on a chart is what's called a pullback. In simple terms, a pullback is just a temporary pause or dip against the direction of the main trend. Imagine price is moving up strongly, then suddenly it falls back a little before continuing higher. That short dip is the pullback. The challenge is that many beginners look at this move and immediately assume the entire trend is over. They panic, close their trades too early, or worse, jump in the opposite direction and get trapped when the market resumes its trend. That's where confusion with reversals comes in. A reversal signals a true change in direction, but a pullback is simply a healthy correction that often offers the best trading opportunities. Instead of fearing these moments, experienced traders treat them as discounts in an uptrend or premium entries in a downtrend. Now, let's dive in a bit more on how to turn what most beginners see as a threat into a strategic entry point that gives you an edge. Spotting pullbacks starts with knowing the overall trend. In an uptrend, price makes higher highs and higher lows. A pullback is the dip that pauses before price pushes to a new high, often stalling at a minor support. In a downtrend, it's the opposite, a short rally that smacks into resistance and rolls back over. On candlestick charts, you'll often see hesitation, smaller bodies, long wicks, maybe a bit of sideways action. These are signs the market is resting before continuing. To measure the depth, Fibonacci retracement levels are a go-to. The 38.2%, 50%, and 61.8% levels are classic zones where price tends to pause and reload. If you line up these retracement levels with visible structure or candlestick patterns, you'll often spot the difference between a real pullback and a true trend reversal. Pullbacks aren't random. They leave footprints in the candles, the structure, and the levels. If this video's bringing you clarity and focus, reward the algorithm, hit like. And if you value calm, strategic trading, subscribe and join us. All right, once you can spot a pullback, how do you actually trade it? The classic play is simple. Buy the dip in an uptrend, sell the rally in a downtrend. But here's the catch, execution is everything. You don't just blindly jump in because price moved against the trend. You wait for confirmation. That might be a break of minor structure, a strong engulfing candle in the trend's direction, or a clean bounce off a moving average. Many traders watch the 20 EMA or 50 EMA. If price pulls back and respects it, that's often a high probability entry. Think of it like surfing. You don't paddle for every ripple. You wait for the wave to form, then ride it with momentum. Pullbacks give you the chance to catch the trend at a better price instead of chasing at extremes. Patience here separates amateurs from pros. It's not about speed, it's about timing. Pullbacks look simple on paper, but beginners consistently trip over them. The first mistake? Jumping in too early, assuming every dip is buyable or every rally is shortable. Without confirmation, you risk catching a full reversal instead of a healthy pullback. The second mistake is the opposite, confusing a true reversal for a pullback and holding on to a losing trade while the market completely flips direction. That's how accounts get drained. And then there's risk sizing. Because pullbacks look small on the chart, traders get overconfident, go too heavy, and get wiped out by what should have been a minor move. Remember, pullbacks are opportunities, not guarantees. Even the best setups fail. If you size responsibly and wait for proof, You'll avoid turning what should have been a high-probability trade into an expensive lesson. Don't fall into the traps. Learn from the mistakes most traders make. Once you've got the basics down, here's how to take pullback trading to the next level. First, use multi-timeframe analysis. Always confirm the trend on a higher timeframe, like the daily or 4-hour, then drop to a lower chart for precise entries. This keeps you aligned with momentum instead of fighting it. Second, add technical confluence. Price action alone is good, but if it lines up with an oversold RSI in an uptrend or MACD momentum shift, that's even stronger. Moving averages also act like magnets for pullbacks. They're dynamic zones where price often bounces. And third, think like a pro with position management. Don't go all in, all out. Scale in at key levels. Scale out as price moves your way. This way, you reduce risk, lock profits, and let runners ride. Master these techniques, and pullbacks stop being guesswork. They become a repeatable, structured strategy that works across markets. Tools and indicators to help you spot pullbacks. While price action is your foundation, certain tools make retracements much clearer. Market profile or volume profile can highlight levels where heavy trading occurred. Pullbacks often stall at these high-volume nodes before continuing. ATR, average true range, is another overlooked tool. It measures volatility so you can judge whether a pullback is normal breathing or the start of something deeper. Candlestick signals like engulfing candles or dojis add another layer, showing when buyers or sellers are stepping back in. Bollinger Bands provide a visual framework too. When pullbacks respect the midband or bounce off the outer band, continuation often follows with strong momentum. These tools don't replace the story price is already telling. They sharpen it. Layering them with support and resistance turns guesswork into calculated probability, giving you the confidence to trade with clarity. Psychology of patience and discipline. Identifying pullbacks is one skill, but waiting for them is another. Most traders lose money not because they can't identify setups, but because they lack patience to wait for confirmation. Pullbacks test your discipline. You'll feel the urge to chase when the market runs without you, or to jump in too early when price dips. The pros understand. Missing a trade is fine, but forcing one is fatal. Patience in pullback trading isn't passive, it's active waiting. You're watching, measuring, preparing, so when the setup aligns, you strike with confidence. This mindset shift is what turns pullbacks from a guessing game into a repeatable edge. Thanks for watching. If this helped, hit like and subscribe for more.